Welcome to Daybreak Australia. I'm Paul Allen in Sydney. We're counting down to Asia's major market opens.
I'm Annabelle Droulers in Hong Kong. The top stories this hour. Asian markets set to kick off a week focused on corporate earnings and economic data as traders seek insight into the direction of central bank policy.
Tesla slashing prices amid slumping sales and swelling inventory as Elon Musk puts off his India trip to deal with a company in chaos.
And a US bill to force a sale or ban of TikTok set to become law within days after winning bipartisan support in the House of Representatives.
All right, it is the start of another week. Let's see how we're tracking in terms of futures at the moment. Don't want to start you off on a bummer after what happened last week, but we are in positive territory for ASX futures, better by about 1/3% at the moment. We've got Nikkei futures looking kind of flat right now as well. The Aussie dollar sits sort of hovering around the 67 US cents level. If you are looking for bright spots at the moment, Bell, I offer gold. That's doing pretty well, especially in terms of Aussie dollars. And energy stocks have been doing okay as well. But elsewhere, it's been a pretty ugly picture.
Yeah, that's right. I mean, it's really just the havens that you're pointing out, and no surprise that we've seen investors flocking to them with what we see in the Middle East. That was really the story on Friday. But then you're also just in that bit of wait-and-see mode. This is here taking a look at what we've got for US futures, and again, just modestly higher so far, but put it in the context of the Friday that we just had, because it was a sharp sell-off across the board. US stocks, that's the S&P 500, dropped below that key 5,000 mark. We saw the Nasdaq sliding more than 2%. But this week, the levels are really going to be tested because we've got more than half of the so-called Magnificent Seven, perhaps not seven now, but more than half of them falling, or rather reporting earnings over the coming days. So certainly investors are going to be really seeking to understand whether all this hype over AI, whether that's got more room to run. Also tracking Brent crude there a little bit under pressure. We have seen the oil market, of course, looking very skittish over what's happening. Iran, Israel, whether that is at risk of further tit-for-tat escalation. Something else we're tracking, and especially whether that means inflation pressures could become even more resurgent, Paul.
Yeah, well, it's going to be a busy week. Let's take a closer look at what's in store. Big tech, of course, Tesla, Microsoft, Meta, Alphabet, they're all going to kick off earnings. Investors are going to be looking for an AI-powered rebound and slumping US stocks. As you mentioned, they've not been a great week for the S&P. Meta is expected to show strong revenue growth and to almost double its net earnings from a year ago. Tesla revenue, though, well, that probably fell for the first time since 2020 after its largest delivery drop on record. It's going to be a busy earnings week in Asia as well, led by SK Hynix. Bloomberg Intelligence thinks the South Korean company is going to probably beat consensus on operating profit, and that's thanks to its dominant market share in high bandwidth memory chips. Now, aside from earnings, Bank of Japan has got a policy decision that's going to be in focus, obviously, and it's expected to keep rates on hold after delivering that historic hike last month. Bank Indonesia, on the other hand, well, it might deliver a hike on Wednesday, try to put a floor underneath the rupiah. And on Monday, we're going to be watching Chinese commercial banks. They'll probably keep their loan prime rates unchanged following the PBOC's hold this month. Over in the US, economists think GDP growth may have slowed in the first quarter. The Fed's preferred inflation gauge, that probably stayed elevated in March. Well, ahead of the release of key US data, we also heard from some Fed officials. Chicago Fed President Austin Goolsbee says monetary officials need more time before cutting rates, as he believes progress on inflation has stalled. And for the Richmond Fed President Tom Barkin, the US economy is not showing signs of running too hot.
We're in a situation today where demand is robust, but I see no signs yet that it's overheating. And overheating would lead to pressure on wages, would lead to pressure on prices, such that things were escalating. And you can't find that in the wage numbers or even in the 3-month price numbers.
Well, let's bring in our first guest. Diana Mussina is Deputy Chief Economist at AMP. Joins us right here in Sydney. Diana, thanks as always for being here. Going to be a big week, as I just ran through a lot of data. We're going to get those PCE numbers out of the US as well. This is the Fed's preferred gauge, of course. Now, this might remain elevated, and we've already seen a number of delays to Fed cuts this year. Can you see a scenario where we don't get any easing at all in 2024?
It's definitely now an increasing risk, but I still think that the base case is that we do see some easing. It's just pushed out later into the year. In my eyes, the key indicator that we need to watch for signs of that weaker inflation print or weaker inflation data that's going to come is in wages growth. And we have clearly seen a slowing in US wages growth. It's now running at about 4% in annual terms on average hourly earnings, and it needs to decrease to about 3.5% to get services inflation down even lower. And I think that there are positive signs that we will see that happening, because the employment indicators on things like the quits rates, or even on job openings, or even on some forward-looking indicators of US growth, and also on forward-looking employment indicators, have weakened to an extent that I think is consistent with softer wages growth, which I think will see lower services inflation and ultimately allow the Fed to become more comfortable. But if we did see the scenario where rate cuts were completely priced out of 2024, I think that you would see a lot more weakness to share markets from here.
Does this really look like a global economy that needs easing? And we're going to get a closer picture of when we get all these PMIs numbers this week as well. The US, Japan, Europe, Australia are among them. Even though inflation is high, global growth economies, they're looking pretty robust. What are you expecting to learn this week?
Well, in that package before that you ran through with all the central banks, it kind of got me thinking, well, we're seeing a lot of divergence actually across what different countries are experiencing at the moment. In some countries, like the US, I think you can really call it a case of US exceptionalism at the moment, where you probably don't need rate cuts right now, but you will see the likelihood of those later this year as growth weakens and employment growth slows. But in other countries like in Australia, Canada, Europe, there is definitely a case for easing, especially in Canada and the Eurozone at the moment. I think that those central banks are very close to cutting interest rates. And Australia, I think, will get there too before the Fed. So there are divergences going on around the world, but I think we will see this move to most central banks easing by the end of the year.
Of course, the notable outlier for that, Diana, is what we see from the BOJ, and we've got that key meeting coming up this week. No change expected, but what are you going to be watching out for in terms of signalling for future rate hikes?
Yeah, obviously Japan is really an outlier here, and what we really need to see is what happens to the inflation data. I mean, the latest inflation data from Japan was a little bit softer than expected. At the same time, I think that in this week's Bank of Japan meeting, they're likely to revise up their wage forecast because of some of the higher Shunto wage negotiations that have occurred. So we're really needing to see higher inflation data from Japan that's sustained and running towards that 3% level on an annual basis to see some further hikes from here. But I guess like some of the central banks that aren't in a hurry to cut interest rates, the Bank of Japan also now isn't in a hurry to hike interest rates at this stage.
Yeah, and I think on that point of needing to see more inflation, where it has come from in Japan, at least historically or in recent years, is really more on the supply side, not so much on the demand side. How much are you tracking, and this is a sort of across other economies as well, but how much are you tracking oil prices and the risk that that also puts into the picture, given the escalating tensions in the Middle East?
Well, we've seen in the past years that supply side indicators are so important now in determining inflation and growth outcomes. So we put together this, what you can call a pipeline inflation tracker. So it tracks key things like commodity prices, PMI price surveys, and shipping costs and storage costs around the world. And at the moment, those have kind of stalled. So that's why inflation has really stopped falling. That's around the world. For places like Australia, actually, we've seen those price indicators look a bit better, because in some of the forward-looking PMI surveys, price growth has come down. So at this stage, I think inflation is likely to stall at its current levels for the next few months until a further slowing in the second half of this year as we see wages growth fall, especially in the US.
Now, in terms of risks, you still have a recession as the main threat. Where do you place the odds of that happening?
I think it also depends, again, what country we're talking about. So in a country like Australia or the Eurozone, I'd probably put the risk of recession 30 to 35% by the end of this year. For the US, I think that the risk of recession is a bit low. I mean, US growth has been exceptionally strong in the past year, and the forward-looking indicators, apart from employment, are still holding up pretty well. I mean, the yield curve is still inverted, but it's been inverted now for a long time, so it hasn't been the best leading indicator for recession. There is obviously always a risk of recession in any cycle that you're in, so that still remains a case for 2025 if the Fed keeps rates at a high level. But obviously the risk of recession is now down to about 15 or 20% for the US in the next 12 to 18 months.
All right, Deanna, we'll have to leave it there. But thanks as always for joining us. Deanna Mussina is Deputy Chief Economist at AMP. Still to come, Tesla CEO Elon Musk postpones his trip to India. He was expected to give a highly anticipated investment announcement. That's not happening. First, though, we're going to be speaking with the International Crisis Group on where they think the new red lines are following last week's strikes by Israel on Iran. This is Bloomberg.
Season is here.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead just coming out right now.
We have Take Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on Nvidia. A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been?
Better than what the street was expecting.
Bang in line with estimates.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
The US House of Representatives has passed $95 billion in fresh aid for Ukraine, Israel and Taiwan, ending a 6-month political impasse. The Senate is expected to pass the package later this week. For more, let's bring in Washington editor Tony Schutzker. And Tony, I think the key question, or one of the key questions out of this is that funding going to be enough for Ukraine to turn its fortunes around on the battlefield?
Well, that's certainly what Ukraine's President Volodymyr Zelensky hopes. He said in an interview with a U.S. network that this should be it should give Ukraine at least the option or the capability to retake the initiative on the battlefield. Now, what that means, of course, in practice is another question, because it's been 6 months. It's taken 6 months to get to this point of the U.S. approving new aid for Ukraine, and all indications and commentary in the meantime has been that that Russia has basically advanced, and there have been some very material signs of that, like the taking of some towns. So. Yes, will it shift the balance? That will have to be seen. One of the things that is in the bill is the so-called ATACMS, a sort of a medium-range missile that the Ukrainians are hoping can start making a difference on the battlefield again, by going after Russian targets.
Tony, this package passed with bipartisan support, and the House Speaker Mike Johnson said history is going to judge them well, but some of his Republican colleagues might judge him a bit more harshly. What's his future?
It's still on the line, but I think the balance of commentary in Washington has been that Johnson showed showed strength and has sort of batted away this challenge or rebellion, if you like, from if you want to call him that, sort of isolationist branch of his conference in the House, his Republicans in the House. But the threat of ousting him from some of these very vocal opponents of aid to Ukraine and his general leadership of the Republicans in the House, where they have the majority, people like Marjorie Taylor Greene, who's very vocal and very present in the media, that hasn't gone away. So time will tell. One of the lines from that camp of his caucus was, well, we hope he'll just see the writing on the wall and resign. That's not what we're hearing so much from the more traditional wing of the Republican Party in the House and elsewhere. But yes, there could be more turmoil ahead.
And Tony, this funding also includes money or aid for Israel, which Netanyahu has suggested could be spent or used to step up operations in Gaza. And it's perhaps not something that the White House really wants to see at this point in time?
Yes, although, of course, the White House has been, for strategic and political reasons, had asked for aid to Israel, and including military aid to be included in this bill, and that's what happened. And there's also probably a political calculation there that a lot of Republicans, or more Republicans actually, were in favor of aiding Israel than aiding Ukraine, which speaks, to the U.S. politics of it. But yes, that's something that's going to have to play out again. And the White House has been increasingly and in recent weeks very, very outspoken about calling for restraint. And that's just something that Netanyahu does not necessarily seem to take into account, at least not in his public statements. So that is something that we'll have to see, and we also have to see what weapons are actually delivered to Israel.
All right, Washington editor Tony Truchka there. Well, tensions do remain following the recent strikes between Iran and Israel. Some analysts have called those attacks a game changer amid continued fears of open war. Ali Baez is director of Iran Project and senior advisor to the president at the International Crisis Group, and he joins us now. Ali, I just want to unpack some of what's happened over the past 24 to 48 hours. Iran's foreign minister called that retaliation by Israeli drones. He described those drones as toys. He said, quote, "We are concluded unless Israel launches a larger strike." So does this for you look like a way for both sides to de-escalate? Are we on an off-ramp here?
It does appear that way. It really seems like this chapter is closed in the tit-for-tat between Iran and Israel. But there are two realities here that we have to take into consideration. First is that the next chapter could be just around the corner. The proximate cause for these tensions, which is the war in Gaza, is still ongoing. Sooner or later, Israel will enter into Rafah, and that will probably exacerbate the humanitarian situation in Gaza. And could inflame, again, tensions between Iran or Iranian-backed groups in the region on the one hand, and U.S. and Israel on the other. And then the second thing that we have to watch very carefully are tensions between Israel and Hezbollah over Israel's northern border. There are about 100,000 Israelis who have moved away from that area and would not go back as long as there is no solution to those tensions. And then the second reality that it's important to pay attention to is that I'm afraid because Iran and Israel have started changing the rules of the game, and it's not very clear what the new rules are, the next time we get into a situation like this, the risk of miscalculation would be higher.
Yes, so it seems to be the more likely path here is that Israel and Iran just continue as they have done for decades, waging a low-scale, smouldering war using proxies. But what are the risks that this could escalate into a wider conflict? And connected to that question, how far along the path is Iran to having nuclear weapons?
Look, Iran-Israel rivalry was mostly, at least from the Iranian side, indirect attacks on Israel, and from the Israeli side was mostly covert operations against Iran. Now, this has become overt and direct, and that's where the risk lies, because both sides have now crossed the line, targeting each other much more openly, and therefore, the next time we enter into another direct confrontation, I think the risks are higher, especially because although both have demonstrated that they don't really want to end up in an all-out war or in a regional conflagration, but they've also demonstrated that they have a much higher tolerance for risk than we thought would be the case in the past. And this is all happening, as you rightly pointed out, in a situation that Iran is closer than ever to the verge of nuclear weapons. it would take Iran, when President Trump walked out of the 2015 nuclear deal with Iran, about 12 months to enrich enough uranium for a single nuclear weapon. That timeline right now is 6 days. And so one of the side effects of these tensions is that the more Iran comes to the conclusion that its regional deterrence and its conventional capabilities are not working to deter an attack on its own soil, the likelier it is to move in the direction of developing the ultimate deterrent, which are nuclear weapons.
Yeah, and so when you stack that sort of progress in terms of military capabilities against also strategic changes, because you were discussing there this shift away from strategic patience for Iran, Israel already follows a program or policy of deterrence. Is there any backing away from such an extreme approach, perhaps?
It's very hard to imagine it. I mean, we have, in a way, mirror image of two governments in Israel and Iran that are very unpopular, right-wing, and also to a certain extent messianic on both sides. And so that, too, increases the risks of further escalation and the difficulty of finding off-ramps. And now we had an administration in the United States that actually worked very hard between an ally and an adversary to try to contain these tensions. This administration might not be in power 8 months from now. And then we would end up in a situation that, again, the risks would be much higher, unless, again, there is some change in the region or some change in the leadership of either of these two countries that would allow for cooler heads to prevail.
And so how do you think the renewed and now variable visible tensions between Israel and Iran, how do you think that complicates the progress or process toward a ceasefire?
Well, it complicates
in Gaza.
Absolutely. It complicates it in two ways. One is that it distracts from what's happening in Gaza. Over the course of about 10 days since Israel first struck the Iranian consulate in Damascus, then Iran responded, then Israel counter-struck Iran. In this period, all attention had shifted away from what was happening in Gaza. And without international pressure on the parties, it's very hard to get to the finish line. Second is that the fact that Hamas, from the day that it launched its horrible attack on October 7th, was hoping for a regional conflagration, because its hope was that there will be a united Muslim front in the region that would come together and would put tremendous pressure on Israel and would change the balance of power. That did not happen, but Hamas has not given up hope on it. And that's why I think during the tit-for-tat between Iran and Israel, it was hoping that it could basically buy more time and tilt the balance to its favor.
All right, that was Ali Vaez, Director of Iran Project and Senior Advisor to the President at the International Crisis Group. Thanks so much for your insights. We'll have more ahead on Daybreak Australia. This is Bloomberg. Quick check of US futures here. We're modestly higher, but against the backdrop of what was a big sell-off on Friday, led by the likes of Nvidia, Tesla as well, dropping ahead of key earnings from the Magnificent Seven over the coming days.
A bill forcing TikTok's Chinese owner ByteDance to divest its ownership stake is on a fast track to becoming a law in the US. The legislation was included in a crucial aid package for Ukraine and Israel passed by the House over the weekend. Our global business editor Karen Lee joins us now. So, Karen, when is this bill going to become law, and what are the implications for TikTok?
Well, there's big implications from this. It's expected to become law in the next few days. President Biden saying he's going to pass it, and that means that TikTok needs to be divested within a year. Now, ByteDance is saying that it's going to explore all of its legal actions. That's what we've been reporting. But this is really big for the U.S. potentially, Paul. So look at how many Americans use TikTok. There's tens of millions of people on it. This is a company that's been under the gun for a long time about how they use American data, how they store American data, and coming into elections in November, ByteDance is a Chinese company. It owns TikTok. And U.S.-China tensions they've already been ebbing. They've already been at a low. And this could potentially throw a real wrench into them as we go into the Biden-Trump contest.
ByteDance would still have nearly a year, though, to divest its holdings or its company in the U.S. So is there any concern from the U.S. side that could actually have some implications, especially when we're in the year of the election there?
Yeah, well, Annabelle, it gets complicated. And I mean, they've got a year to divest it, but they're going to take legal action. That's what we've been saying. So it really depends what that looks like and how much they're able to do on that front, and how this kind of plays out over the next couple of weeks. But at the same time, I mean, really the big issue here is going to be the election in November. This is a Chinese company, like I said, U.S.-China tensions. They've been trying to get them on a better track, but this could throw a real problem into them as we go into the election in November. And at the same time, for a lot of Americans, you know, especially younger voters, they get a lot of their information from TikTok, and not just cooking videos or exercise videos, but it does impact potentially how they're going to vote and how they see politics. So TikTok has really taken a major voice in America, and if you eliminate that voice or change it in any way, we could see some real implications coming into the fall.
Karen, I want to talk about Eric Anderson, who was the US-based general counsel for TikTok. Is his mission now complete and unachieved?
Yeah, well, he's been leading these talks with the U.S. government for a long time, and Bloomberg's reporting exclusively now that he's going to be removed from that position in the wake of this decision in the U.S. But TikTok is saying that that is not the case, so we're going to have to see what happens there with him.
All right, that was our global business editor, Karen Lee, there. And let's shift focus now to what else is going to be a key focal point for this week, and that's earnings, because we've got the likes of Microsoft, Meta, Alphabet among the tech giants that are scheduled to report this week. The so-called Magnificent Seven's results will arrive at a crucial time as investors look for an AI-powered rebound in stocks. Garfield Reynolds leads our Markets Live Asia coverage and joins us now. Garfield, I just want to know how high the bar is. Do these companies need to really jump over something that's actually quite sizable to convince investors that this rally can be sustained that we had at the beginning of the year around tech?
Well, it's very interesting when you look back the last time. Now, I know NVIDIA isn't amongst those that are reporting this week, but last time NVIDIA reported, the stock dropped into the earnings. People were saying, oh, I can't possibly meet what back then were pretty elevated expectations. And then it completely blew them out of the water. So on the one hand, you have that recent history of concern going into earnings, but there's that second part. The earnings really astounded to the upside. And so I think that that's part of what's helping to drive some of the concerns going into this earnings season, is that it is very much about the Magnificent Seven. They're expected to show growth in earnings. The rest of the S&P 500 is expected to show a decline. So there's this big burden on them, and they probably do face a pretty high bar, in particular to be able to spur sustained gains, because everyone's digested, those NVIDIA earnings, some of the other earnings that have gone along. So there is a high bar, not just about what they report now, but about the outlook. Again, recent history, TSMC, the Taiwan chip producer, it reported just recently, and on the face of it, those earnings looked fairly good, but there were concerns about the outlook. Some of the impact got a little bit washed away by the geopolitically induced fluctuations that we saw at the end of last week, but it was still there. And it even came down to, I saw some people talking about the biggest problem with TSMC was that the CEO on the call seemed, far less upbeat. Just his body language wasn't great. Whereas last time round, there were also challenges within the earnings, but he looked and sounded very optimistic, as though, the only way forward was up. So I think the Magnificent Seven need to truly live up to their name and be magnificent, those of them that are reporting this week. Otherwise, we could have some further underperformance from them, or also, there's the concern for the rest of the equities universe, and that highlights one of the concerns in general, which is that a lot of the rally in the last little while has been so narrow.
Yeah, Garfield, the equities universe probably should not be looking to the Fed for any support at the moment. I mean, those calls we had a few months ago of 6 rate cuts for 2024, they're looking pretty fanciful now. Where are we in terms of market pricing for easing at the moment?
Well, the market is pricing 1 Fed cut for certain in November, which it would be very interesting if that does take place, because that means it'll be right just after the election, I believe. But yeah, just 1 in November fully priced, and then even money for a second one in December. So that is a big change from those 6 that were priced in early. But the equities market has only really become significantly concerned about that rates outlook as the Fed made it clear that although in theory 3 rate cuts are still penciled in, that was the March dot plot, it's obvious to everybody now that the best case scenario coming out of the June update to the dot plot is likely to be 2 cuts, might even only be 1 as the market is pricing. And that's of more concern to the equities market, especially because there's kind of a double problem here. One is that earnings look like they're losing momentum, which makes it harder to justify valuations at current levels, even amid economic optimism. So they need more rate cuts than the Fed is likely to deliver, unless there's a big step up in earnings. But then a big step up in earnings might signal that there's no rate cuts coming. And then the downside is, if you do get the market turning towards pricing in those rate cuts again from here, that probably means the economy is not doing very well. So it's kind of turned from win-win for equities when looking at the rates set up about 3 months ago to lose-lose.
All right, Garfield Reynolds, who leads the Markets Live Asia coverage. Thanks so much for joining us. Let's talk about Elon Musk now. He's postponed, or decided to postpone, his trip to India. He's blaming the delay on pressing issues at Tesla. And Tesla spent the weekend cutting prices for its cars and driver assistance software. This is ahead of earnings expected to confirm a first revenue decline in 4 years. Musk has also staked the company's future on a next-generation self-driving vehicle concept called the robo-taxi. For more on today's Big Take, let's bring in our global business editor, Peter Verco. Peter, never a dull moment at Tesla. I think his biographer described this as Elon Musk in demon mode. What's going on?
A great question, what is going on at Tesla. Even by Elon Musk's standards, it's been a pretty wild week. It started off last weekend with the announcement that they were going to cut 10% of their global workforce. That's about 14,000 jobs. There's reports that those cuts could be even deeper. Then during the week, we saw him go what he called balls to the wall on the autonomous taxi, which seems to have taken over as the company's priority from a $25,000 mass market car, which he was talking up at the last earnings call only 3 months ago. And investors have really been keen to see that move towards a mass market car to try and fill that hole in Tesla's sales that we're seeing. That was only the beginning of the week. In the rest of the week, we saw the company try to revive a shareholder vote on the $56 billion pay package for Elon that was struck down by a court in Delaware in January. They then had to recall all the Cybertrucks that they've sold in the US for a faulty accelerator pedal that could lead to accidents. And then, as you say, on the weekend, we saw price cuts in the US, China, Europe. It's 3 key markets. And that really suggests that sales may still be getting worse than what we saw in the previous quarter. He called off that trip to India that was planned for this week, citing these heavy obligations at Tesla. We've got the earnings call coming up on Tuesday, US time. So I think a lot of focus now is on that to see if we can get some clarity on what Tesla's strategy is.
Yeah, that's exactly what I was going to ask about, Peter, because as you say, that chaos, those challenges very much reflected in their stock price at least, which is down more than 40% since the start of this year. But what are we looking to see, and what would reassure investors from this set of earnings, do you think, if anything?
Well, it looks like we're going to see a pretty bad set of numbers from Tesla come Tuesday. We've already seen that drop in sales. It's expected to report a 40% plunge in operating profit and its first revenue decline in 4 years. I think what investors want more than anything, though, is just some clarity on the strategy. As I said previously, it was only 3 months ago that on the earnings call, Musk was talking up progress on this $25,000 mass market car. Last week, the whole thing seems to have swung towards this autonomous self-driving taxi or robo-taxi, and we already know that Tesla's claims of full self-driving don't really exist. Full self-driving is not full self-driving. It still needs constant driver supervision. So it's going to take some time before we can get to a full self-driving robo-taxi. And we've seen that other companies from Uber to GM and Cruise who have tried this have had huge problems getting these cars on the road and keeping them on the road safely. So I think that will be the main thing that investors want from this, is some clarity on what is Tesla's strategy going forward.
That was our global business editor, Peter Verco, there, and some stories that we're following on trade this morning. Well, the US trade representative says she expects a conclusion soon on a review of tariffs on more than $300 billion in Chinese goods. Last week, President Biden threatened higher levies on Chinese steel and aluminium as he seeks to win over union workers ahead of November's election. Catherine Tai told us Biden has kept the Trump-era tariffs in place for leverage with Beijing.
There is no such thing as free trade in steel. The market in steel globally is significantly distorted by what we are calling the non-market policies and practices coming out of China.
Meanwhile, Chile has imposed temporary anti-dumping tariffs on Chinese steel products used in the country's mining industry. That's in a bid to support some 20,000 jobs. Chinese steel products will face levies of up to 34% over the next 6 months. An uptick of cheap imports has been pressuring steel producers across Latin America. Quick check on commodities now, and we could perhaps get clues on the direction of where we go from here for the likes of metals, oil as well, given the amount of earnings that are due over the coming days. So you've got big oil firms, for instance, Exxon, Chevron, Total Energy set to post their first quarter results later this week. And then on the metals or the mining front, you've also got the likes of Caterpillar, for instance, that could shed light on the strength of those industries. But otherwise, continuing to track gold, sitting around a record high, and a lot of focus on that demand, particularly from buying within China. We'll have more ahead on Daybreak Australia. This is Bloomberg.
It's time now for Japan Ahead. The latest poll by Asahi shows the approval rating for Japanese Prime Minister Fumio Kishida's cabinet rising by 4 percentage points to 26%. A separate poll by Yomiuri shows the approval rating unchanged at 25%. We'll be watching Nissan shares when the market opens after the Japanese carmaker reported full-year profit that missed estimates. Profit came in at $3.4 billion. That was 15% lower than it forecast as recently as February. Plus, shares of Kokusai Electric may decline after the end of a lock-up period determined in its IPO. Annabelle.
Well, Paul, we've got Japanese markets coming online at the top of the next hour, and you do see Nikkei futures there just trading a little bit high here, but quite range-bound, and that's what we're seeing across those other assets as well. That could really set the tone, I think, or the direction for trading today, just that investors are going to be very much in wait-and-see mode, because in Japan, not only are we awaiting key earnings coming out, you've got Middle East tensions ongoing, you've also got eco data. The US, of course, you've got the Fed's preferred measure of inflation, but also you've got that decision coming through from the Bank of Japan and what that will tell us. Could we see any clues perhaps on the timing of possible future rate hikes?
Well, Japanese basketball says it's coming after the world's biggest leagues. President Shinji Shimada told us exclusively about the B League's ambitious goals.
We want to become the second largest league after the NBA in all aspects. I have a vision where in 5 or 10 years, when the basketball industry around the world gets together and says which league is the next big league after the NBA, the majority of people will say it's the B League. I hope we can reach that goal by 2030. In a business sense, I think we will be the second biggest as soon as this year, surpassing the Euro League in Europe and the CBA in China. It will take some more time to see if we are really strong or weak, and if we are competitive or not. So in terms of competitiveness, I would like to set our goal, 2030.
When we talk about the B League, we have to mention the foreign players coming in, the talent coming into Japan. There are rules like in other professional sports like soccer where you can only have 3 foreign players per team. Is that a major hurdle for you to elevate the game of basketball in Japan?
We have 3 players now. In the near future, we will also allow a naturalized player and an Asian player in the roster. Therefore, I think this league has already become the most globally diverse in Asia. In many Asian countries, only 1 or at most 2 foreign players are accepted. We are considering increasing the number in the future, partly to create a high-level playing environment with foreign players, but also to help create strong Japanese players who can break through and compete, and strengthening the competitive environment.
The average B League player in Japan makes about $150,000 a year. Obviously, the NBA players make multiples of that. How are you going to allure those players? How are you going to attract them to come to Japan and play in the B League?
Yes, that is the average, but imported players coming to Japan now are already highly paid. In relative terms, the market has already reached high salaries like the NBA. Many top players wait for the NBA to call them up when they get a chance, but now those players are starting to come to Japan. As the B League continues to develop and grow, the salary limit will be raised, and I think the environment will become more and more attractive to those players.
What do you see as the next big milestone for B League?
The league has become one of the most notable in the Japanese sports industry. I think it is attracting a lot of attention, including elsewhere in Asia. However, in order to make this truly sustainable, I think we need to take steps for the future. I am increasingly aware that we need to cooperate and collaborate with other Asian countries, the US, Australia, Europe, and other leagues, not only to bring in high-level players from overseas, but also to develop global strategies, such as selling broadcasting rights and receiving investment from overseas. The other strategy is to nurture the younger generation. We need to think about how we can raise the level of elementary school students and other small children, and how we can put more effort into nurturing them when they are young, such as sending them to the US. We are making decisions to invest our resources in things that will lead to the future, not just what is in front of us. We already know that this will be effective in the next 10 to 20 years.
What's the one thing Japan needs to stay ahead in the world?
I believe that Japan is approaching a turning point in terms of how far the government can go in making decisions regarding diversity. Japan is probably the first country in the world to experience a significant decline in population and an aging society. I believe that the world's attention will be focused on how to resolve this kind of development. We need to make full use of the power of sports, the power of young people, and partnerships with people overseas to get through the current situation, and I would like to take part in this process as well.
That was the B League president, Shinji Shimada, with Bloomberg's Komuri Mori there. And you can catch Japan Ahead every week. That's every Monday at 8:40 a.m. if you're watching in Tokyo, 7:40 p.m. Sunday in New York. And Bloomberg subscribers can watch us live on the terminal using the T Live or TV Go function. This is Bloomberg.
Well, it only happens once every 4 years, Annabelle, and I'm not talking about the Olympics. We are way more nerdy than that, aren't we? We're talking about the Bitcoin halving. So it hasn't happened since, when was it? 2020, I believe the last halving was. Happens every 4 years. So daily reward paid to miners, it's going to drop from 900 Bitcoins to 450. And not a lot of movement here in the price, though. It looks like it was pretty much all priced in.
Yeah, priced in and also carried off maybe without a hitch as well, Paul. But we're kind of trying to understand, okay, if it's already priced in, what do we need to be looking at in particular? And as you said, we do focus on those more nerdier aspects, but one of the nerdy aspects out of this is what it means for the Bitcoin miners, given that they're getting such a big cut or reduction to their revenue. So some of the in the market are saying that essentially what could happen here is you're going to see a sector consolidation. So publicly traded firms, those could be the ones that get more market share, given that they've got greater access to funding, and in particular equity financing. That's what JP Morgan is saying. So they're really focused on Bitcoin miners in particular. The rally, though, we've seen, of course, has been pretty significant so far, but you haven't really seen the likes of Marathon, Riot. They're really lagging that rally or that big jump that we've seen, and actually that is going to be really one of the key talking points. But coming up in the next hour, we are going to be discussing the market open, of course, because we've got a big week of earnings ahead, a big focus there really when it comes to the Magnificent Seven, the so-called Magnificent Seven, given the big earnings numbers that are out. Nvidia not on the docket over this week, but still watching that one in particular, given we had a sharp drop on the weekend, and these are some of the chip stocks that we could be watching off the back of that. SK Hynix, of course, due to report its figures. But we've got the open, as I said, for Seoul, Sydney and Tokyo that are next. This is Bloomberg.